What's going on, everybody? Liam O'Reilly, Vermont Economic Realtor. Hope you're doing well. Have a couple articles I want to share with you folks. I'm going to start off with a Forbes article before getting into the meat of this video, which is going to be the Redfin article that I have in the title here. But this Forbes article, right off the bat, home builder confidence jumps for the first time in 12 months as housing market turning point may be here. I thought this was very interesting. I mean, home builder sentiment, something that we've talked about a lot on this channel, is has been low for a while now. So I think there's some added confidence in the market as we move into the new year here, and it's showing up in the home builder sentiment data. Also, lumber prices are very low right now, which might be giving home builders more confidence than they had in previous months, but it's still down significantly year over year. So it says here Wednesday found the closely tracked metric rose to 35 this month on a scale of 0 to 100, still down from the 83 reading last January, which I think that's very interesting how high builder sentiment was at the beginning of January, and then how it shifted so drastically as interest rates rose. And they mentioned here in this article that the it's they think that the market is pricing in that the Federal Reserve is going to start slowing their rate hikes and stop hiking their rates relatively soon. It'll be interesting to see what happens at the end of this month, beginning of next month, and what the Fed decides to do. They talk about it right here. Producer prices fell and retail sales fell. So it's going to be, in my opinion, as I mentioned in some of my other videos, I don't think I think the metrics that the Federal Reserve is looking at haven't been affected enough by their rate hikes, and that's they're probably going to be pretty hawkish coming into this next meeting here, and are likely to continue rate hikes at least, I think, a little bit longer than what this article suggests, and we'll see if that has an effect on builder sentiment and rates. But I think it might. If the Federal Reserve hikes rates higher than where people think they're going to go right now, then I think we're going to see higher mortgage rates. We're going to see lower builder sentiment. So it'll be a good thing to watch in the upcoming weeks. But now to the main part of this video that I wanted to talk about. This Redfin article here. Housing market update. Sales are slow to kick off new year, but more buyers start searching. And this is something that I am personally experiencing here in Vermont. The in September, October, November, basically the phone wasn't ringing here. There wasn't many new leads coming in. I had a handful of sales, handful of transactions, but it wasn't crazy busy. Right now, I am very busy. I have about 10 active buyers who are out there looking right now, actively submitting offers. I have a handful of seller leads. It's just way busier than it has been. And I think we're seeing that in the data, and going back to builder sentiment and what we've talked about a lot on this channel about inventory is still very low. And so as demand is increasing here as we move into the new year, there's not the homes available for these people to buy. And let's take a look at some of these metrics. So I'm just kind of skipping the top part and going down to these charts. One of the charts that I really wanted to highlight was at the bottom here. Let's see. Here it is. Redfin Home Buyer Demand Index down 29% year over year. So what this is, it says it right below the title there. Weekly value of Redfin's seasonally adjusted home buyer demand index based on requests for home tours and other home buying services. So these are the amount of buyers that are out there in the market. The red line here is 2022. Now you can see it's significantly down from this point in 2021, but it's still above 100. If you look at what the scale is, scroll down so you can see it. 100 is January, February of 2020. And right now, we're at 125.8 is what we're at. So home buyer demand, people requesting tours for homes and home buyer services, demand is still above where it was this time in 2020, where it was pre-pandemic, which I think is pretty interesting. I mean, demand has been crushed, as we've talked about, many times on this channel, and you probably hear it all the time in headlines with these higher mortgage rates, but it's still above where it was in 2020. And this is something that I think has been key for Vermont. And as you know, there's no national housing market, but I think it's something that's going to hold the national market together, even though some portions of the market are falling. And Redfin says that in their article here. I'll show it in a minute, but basically there are major metros like San Francisco and Phoenix that are experiencing significant price drops, but with overall demand nationally still above where it was in 2020 and supply still so low. I just think there's enough support to keep most markets afloat. Certainly here in Vermont, there's still. I've submitted a handful of offers this week, and all of them have been multiple offer situations. And it's not, these homes aren't. I mean, they're solid properties, but it was a little surprising to me. You know, both of these properties seemed like they were priced accurately. I didn't think they were overpriced or underpriced by any means. It seemed like they were at market value, and there's still multiple offers, multiple bidders out there looking for these homes, looking to jump into these properties. So let's take a look into some of this other data. Average home sold for 97.9% of final list price. And I think, you know, this is something that we talked about when we looked at the Vermont specific stats. Vermont is closer to right around 100% of list price. But when you look back, at least at the Vermont data of this statistic, in, you know, from 2012 up to 2020, homes were selling on average for less than 100% of list price, but the median sales price was still increasing, which is just, I don't know, it's just an interesting thing to note as you look at this number. Obviously, it's way down from where it was. You can see 2021 all the way up to 102% of list price at peak. And, you know, this metric is below the, or no, it's still above. This is why, yeah, still above the 2020 data. It looks like there, or maybe it's right at the 2020 data. 4% of listings had price drops. This is something that is very significant. Look at that, way up from where it was before. Way above 2020 levels. And I think this is just the nature of a changing market where people are having a more difficult time pricing their homes. It's tough to know exactly what's going on with interest rates and with the volatility going on in the housing market right now. So my guess is that's part of the reason why a lot of these listings have had price drops. Still, 22% of homes sold above final list price. Again, above the 2020 data pre-pandemic, it was right below 20% of homes that sold for over list price. So we're still above 2020 data in that regard. I don't know. I think a lot of these indicators, I'll leave this link in the description. The point that I'm trying to get at here is that a lot of the indicators that we're seeing, although they're down year over year and they're down from 2021, they're still above 2020's data. They're still above pre-pandemic data. And, you know, as we've mentioned before, inventory is still low. Actually, let me dive back in here because they talk about inventory here. Active listings for sale up 21% year over year. So we're above the 2021 data, but we're still below 2020's data. So obviously it's a tough market out there right now with these higher interest rates and high home prices. But I mean, as you can see right in this chart, the homes for sale are below 2020, and the demand, the buyers out there requesting home tours and requesting home buying services, is still above where things were in 2020. So nationally, it's still a pretty hot market. It's certainly still a pretty hot market here in Vermont. And I think what this data is showing is nationally, a lot of other markets are experiencing this. Now, not all markets. So they talk about this here. Home prices fell from a year earlier in 20 of the 50 most populous U.S. metros. So not even the majority of U.S. metros are experiencing home price declines on a year-over-year basis. Now, some are, like I mentioned before, San Francisco, Seattle, San Jose, Austin, Phoenix, Boston. So some of these metros are experiencing a decline on a year-over-year basis, but not the entire housing market. And when you look at some of these leading indicators, like we've talked about in this video, I think there's at least an argument there that nationally, a lot of these markets are probably going to weather the storm better than some of the headlines might lead you to expect. So anyway, Liam O'Reilly, Vermont economic realtor. Let me know what you guys think. Leave a comment. I love hearing from you guys. Do my best to reply to every comment there. And if you're looking to sell or purchase a home here in Vermont, I would be happy to help you. All my contact information is listed below. If you are looking to sell or purchase a home in another state, reach out to me directly. I'd be happy to find you a great agent. I'll vet them for you and get you somebody good. Make sure you have somebody taking care of you. So anyway, let me know what you guys think of this video, and I'll see you guys in the next one.